This episode of Moontower Business is brought to you by your local State Farm agent, Alejandra de la Torre. Alejandra's team has amazing customer service, knowledgeable staff, and super competitive pricing. They also have a very convenient location in Round Rock, located at 2200 North A.W. Grimes Boulevard, Suite 500. Alejandra's team is bilingual, and they have over 52 years of combined experience in the insurance industry. Alejandra's team is very friendly and helpful, and they always go the extra mile. They even have after-hours emergency availability. So please call Alejandra's State Farm team for all of your insurance needs, whether it's auto, home, life, or business. Their telephone number is 512-244-3311, or you can see their website at www.alexdelatorre.net. Welcome back to the Moontower Business Podcast. This is your host, Joseph Obel. Also our co-host here, Ben Murray. And today we're speaking with Joe Kelly, who's the CEO of Unchained Capital. Joe, how you doing?
I'm great.
Good. Thanks for joining the podcast. Excited to dive in and talk about Unchained Capital and cryptocurrency today. Can you kind of tell listeners just a little summary about what Unchained Capital does?
Unchained Capital is a financial services provider for long-term Bitcoin holders. My co-founder and I got started in 2016 after we saw ourselves as long-term Bitcoin holders in it for the long run, held it for a few years by then, but there were no real financial services for us or no ways to get loans on your Bitcoin, and all the ways to kind of buy it. It was always through an exchange or some other place where there was all kinds of other tokens as well. So we thought that Bitcoin is an asset that's here to stay, going to be around for a long time. It's only going to grow, and that the more you hold Bitcoin and understand things about it, you might be more inclined to want to hold it in ways that other people sort of aren't in the way of you and your Bitcoin. So we really try to embrace those aspects of Bitcoin that it makes available to people as just a new form of money, a new form of asset. And yeah, so we're here to kind of make the world a better place through Bitcoin.
Great. And you're based in Austin?
Yes, sir.
Excellent. Well, before we get into the company, I'd like to kind of find out how you got into this, and maybe you can just talk about your background and professional experiences before you launched Unchained Capital.
Sure. So I had an entrepreneurial bent, or been interested in starting companies ever since I was a kid that I can remember. My dad had a small business. I was born in Anchorage, Alaska. I grew up there until I was 13. Then my mom died of cancer when I was 13 years old, and my dad, he had big hairy dreams. He wanted to sail around the world on a sailboat. So he pulled my sister and I out of school when I was that age, and we drove all the way from Anchorage to Florida, moved onto a sailboat, and lived on that for 3 years. So from the age of about 14 to 18, was just on this boat in the Caribbean, went through the Panama Canal, had a great adventure as a family, really cool kind of healing experience, and only also kind of reinforced the idea of not wanting to work for other people or start my own thing, and kind of think about more global issues or what are really important trends and things that are going on. And so I'd met some people from Austin while we were out sailing, and they talked about UT, and they thought that sounded great. And so came here, started at school. I had a really tough time. Just think that experience being on the boat, but it shaped me. It meant I felt kind of different from my peers entering the school at the time. And so I dropped out after a year, also just because I knew I really wanted to start companies, and it's kind of hard to do that while going to school and also having to make money. So I'd started a few smaller projects. I had a residential contracting company for a little while, and as I wanted to kind of look at app development and things on the internet, I happened to meet two grad students that were at UT at the time in the physics program, and they had started something called InfoChimps. So at the time, I was also already thinking about data. I think data it's a really neat new kind of resource that's come about in the last couple decades, and this is kind of 2009 type timeframe. So there's just new ways to kind of manage data that were coming out. And so those guys were really on top of that as technologists. And I was just interested in working in what I thought would be something that would have big impact in the world. And so about that same time, the term big data came to be. So we started InfoChimps and ran it for 4 years, and from about 2009 to 2013. For much of that time, I was the COO. I was the CEO for a period. And then we sold to Computer Sciences Corporation in 2013. They're a big IT systems integrator kind of firm. They compete with like IBM Consulting Services and folks like that. They've since rebranded and they're called something else now. But it was a good marrying up of what we built at InfoChimps as a technology platform for connecting a bunch of different data sets that big companies like State Farm Insurance or Walmart or any of these kind of big brands that have large scale data problems internally. They were looking for new tools and reaching for new things to pull in and manage that stuff with. So we were a great solution. But at the same time, with that exit, my co-founder Drew and I found ourselves, we like to say, for the first time in our lives, with money we could afford to lose. And so we bought some Bitcoin with that. We developed an interest in Bitcoin while in InfoChimps, and we're curious about it. And I think like a lot of people had the initial reaction of, oh, this is not really a thing. Who's going to want this? And then you kind of ignore it for a few years. Then you learn, oh, it's still around. Okay, maybe there's something here. And so that kind of planted some more hooks for us, the act of having bought it, to learn more about it, what it means, what its potential is. And so after a few years of kind of getting married, engaged, and handling some family matters, we got started with Unchained in 2016.
So what year was it when you ended up buying some Bitcoin, and at what price did you get it at?
That was 2013, in the $300 range.
Wow.
That's awesome.
Oh, it's like at 11,300, something like that today?
Yeah. You can't leave out that we may have bought at 300. It may have gone up to 1,000 by the end of 2013, but it did crash to like $150, like in 2014. Okay. So I can't celebrate the win without the losses too, or what felt like losses for a time.
Sure. So, I mean, you were involved in a few different entrepreneurial ventures before launching this company. What kind of lessons do you think you learned or took from that experience?
For me, my strengths usually as an entrepreneur have always been around just trying to frame like, what is the next thing we should do? And I think it's sometimes the entrepreneurial path is sometimes really hard because you might have visions of the way you want things to be. You want the successful business, or you want this outcome it does take sometimes years, at least many months to come to fruition. And so kind of always finding out like, what is that next best thing we can do? Who's the person we should be emailing? What is the proposal we should be sending? How should we be redefining our market or something? And just kind of being able to frame like what to do next on a day-to-day basis. And that's why I've always kind of gravitated to kind of operations and startups, or I've kind of been either COO or CEO or some kind of leadership role like that, is because especially in those kind of misty, like early days of a new company or venture, sometimes just figuring out what to do next is hard. But momentum is something that can really build on itself, and just forward motion on things is a lot to like be appreciative of. So yeah, that's maybe some lesson and context on how I think about it.
Gotcha. So how did you come up with the name, or who came up with the name Unchained Capital?
I did, more or less, but of course with like good support and input from my co-founder. And a lot of the idea was about, our first product was a Bitcoin-backed loan. So clients would post Bitcoin as collateral. We'd lend to them US dollars, kind of like your house is collateral in a mortgage. So this is a way for somebody who maybe holds Bitcoin. Maybe they bought it not at $300, but at $10. And so now it's, whatever the price is. And they have a lot of kind of, if they were to sell, they'd pay a lot of taxes. And, even though it's worth $11,000 some odd dollars today, it could still be worth $100,000 in a year. So why do I want to sell now? So getting a loan against it is a way to preserve that optionality and not take the tax hit. And so we looked at sort of trying to evoke, like, what are you doing with a product like that? You're unlocking value in your Bitcoin. Maybe you're freeing value in your Bitcoin. to use in the now. And also just kind of it speaks to, I think, a broader vision for just where there's so many financial services lacking. There still are financial services lacking for Bitcoin. We've come a long way, but freeing. Just that for us, there was a lot of symbolism around freedom, freeing, and which is a value I care about just from my background and why I picked this path. It's like freedom and independence is something. Unchaining is kind of something I'm able to land on, and of course, it has to do with like a blockchain. And there's even an irony in there. Somebody was able to point out. I didn't see it at first, but everyone talks about blockchaining all the things. Let's put it all in the blockchain, and we're like, no, unchain it.
I wanted to ask, so when you started out back in 2016, and we kind of talked about this a little bit at the very beginning, I didn't get into looking really, I knew about Bitcoin for years, but I didn't really look into it until it really had a big boom, I think around the end of 2017. So if you started in 2016, did you have trouble with clients trying to get loans and then seeing that skyrocket and knowing, well, our coin's worth this much, we have this smaller amount of loan, we want to get more money, or vice versa? I'm thinking 2017, I give you 2 Bitcoins that I paid $300 for, and you appraise them at $18,000 or something like that. And then say 6 months later, it's worth $900. And, it's kind of almost like the housing crash. My house is worth this much. I've got a loan on it for this, but what is that really worth? Were people hesitant after that kind of large drop by Bitcoin? I know it's come up quite a bit, but it does seem like it fluctuates quite a bit too.
Yeah. So there's a lot of different factors that I think are in there and what you're talking about. So definitely at the time we were looking at building a business in 2016. It's interesting because Bitcoin had less than a $10 billion market cap. Like just the overall market, like it was less than $1,000 a coin still. And so it was really in kind of 2017 that it picked up a lot of steam, crossed $1,000 early in the year, and then by the end of the year, it was cresting at $18,000, $19,000. And so we were lucky with timing that we started actually lending in the summer of 17, and then after securing our first bigger lending facility, we launched more publicly in November of 2017. And so we did catch a lot of early business just because, psychologically, when people think about these kinds of loans, usually they think about it like, okay, well, today I know I have this much, I have $100,000 in Bitcoin, but then, a couple of weeks or a month later when Bitcoin, maybe it's doubled or it's suddenly tripled or gone up a lot, and I have $150,000 or $200,000 in Bitcoin. And now I feel wealthy and like that I wanted to buy that boat or I wanted to put a down payment on this property. I feel like I can do that now, but I'd rather not sell the Bitcoin and still go up more. And so it's usually in those bull runs that, people tend to reach for a product like ours because they're not too eager to sell. And that's, I think, fine. And that's natural. We do like it when clients, and they should like it too, when they don't necessarily leverage all of their Bitcoin. Because it can be painful on the way down. The way our model works is it's actually way better collateral than a house. It's still, I think, it's still a distortion in our credit. The way credit works almost in a certain way that the interest rates are so different for a house versus Bitcoin. But Bitcoin's something that you know what its price is all the time. It's something that trades 24/7 on a global market. Yeah. And when you have it, you possess it. Like you don't. Like sometimes there's title issues with a house, or there's something else. Like there's a lot of things to get in the way of what is this house worth at any given minute, and how quickly can you sell it, kind of a thing. So Bitcoin's really a great form of collateral, and that means we have a very safe lending model. In the 3 years of real operating history we've had with active loans, we've never had a loan loss. Even in price crashes, like 2018, when it went from nearly $20,000 to $3,000, there's no loans that got underwater. And then earlier this year in March, you had a 50% down day in Bitcoin, where it went from like around $7,500, $8,000 to just under $4,000 within like 6 to 8 hours. So even those instances, a model like this can survive. And I think that's That's just nature of it as a new asset that's got a lot of great qualities.
And then, so I know we could spend hours on trying to explain this, but one thing that I always kind of struggle with, because you know, for me, it's like, all right, I need to have an actual thing, you know, Bitcoin ultimately, it's all computerized, that kind of thing. So how can you explain to the listeners that don't understand Bitcoin on, you know, okay, I buy this Bitcoin, but really what am I buying and where is this money going to? Like, how do you equate that, you know?
Yeah, it's a great question. So Bitcoin's novelty, or if you want to say maybe the most principal thing it's done or the coolest thing about it, is it's a digitally limited asset. Once we started digitizing things, MP3s, songs, movies, like you had this huge pirating problem, this huge copying problem. Once it's digital, it can be copied.
Yeah.
And but Bitcoin, based on certain rules and its architecture, it's a network, an open network like the internet is, but that has these finite resources that are spelled in it called Bitcoins. And that network keeps track of where the Bitcoins are all the time and any changes to that, to where they're at. And if you want to change the state of some Bitcoin, if you want to move Bitcoin from my address to your address, you have to sign a transaction that the network recognizes as valid. And so it's in the signing of that transaction that you communicate, I'd like to move this address to the other, or move this Bitcoin from this address to the other. And you conduct the signing with something called a private key. And so this is kind of one of the, it's starting to get from 101 to almost like 201 level understandings of Bitcoin, that really when you talk about Bitcoin, what's valuable are the private keys, or the ability to spend the Bitcoin. And so that's really where our company lives. We live very close to the idea that people should be holding private keys. Not everyone does, not everyone needs to. When you use a service like Coinbase or a lot of these consumer-friendly places, they hold the keys for you. So, when you buy Bitcoin, you have it in an account through them. And that's a fine, user-friendly way to do it. But still, like Coinbase could change their policies and say, hey, if you want to remove Bitcoin from here, we need a passport. And so but if you actually have the keys, you don't need to talk to anybody. Nobody can get in the way of you moving the Bitcoin. So, I think that's one of the, steps to kind of get to if you're really learning about Bitcoin, is understanding that, okay, it works by keys. You need a key to authenticate to the network and actually move the coin.
Okay.
Do you only work with Bitcoin, or do you work with any other cryptocurrencies like Ether?
We work with Bitcoin only. We supported Ethereum for almost a year, just shy of a year. It's hard to support more than one blockchain in the way that we do it, because we live at what we call this native level, or the very protocol level. You have to kind of almost double your engineering, not always double, but you have at least a 30% tax in any of your engineering and product development efforts. Ethereum's a lot less stable of a technology support in that kind of a way. So, and then it's also a smaller market. When we did support it for that time, Ethereum loans were they never got more than 5% of our loan book. So it's just from a market demand perspective, and from interest alignment perspective and efficiency of people and resources, we choose to focus on Bitcoin. And that has some marketing benefit too, is there's a real community around Bitcoin that care about it kind of above all else, for better or worse. And so, we also tend to kind of resonate more with those people that you want to work with, other companies that believe, like they do, that Bitcoin is really still the top most interesting digital asset.
Gotcha. So you have the Bitcoin-backed loan, and then you have some other services that your company offers. Can you talk about those?
Sure. So we have what we call the Unchained Vault. It's a way to store Bitcoin that uses our platform, yet still keeps users in what we'd say sovereign control of the Bitcoin. And it's an interesting needle to thread, and it's the kind of it's what creates, I think, a new type of bank, a new type of banking relationship for us and our clients, because if the way financial services in Bitcoin worked like they do in the traditional sphere, you'd always be giving your Bitcoin to a Coinbase or some centralized provider whenever you're wanting a loan or wanting to trade it or do anything. But then that would kind of remove all the value of it as being this asset you can hold and not be censored or not have it seized by the government or some services provider. So us as a type of Bitcoin bank, if you will, we offer this vault product as a way to help make it easy for clients to store Bitcoin themselves, but we sort of back them up, and we back them up in a way that we don't fully control the coin, but keep them in control. So it's a really great product for people that want to just have the safest way to hold their Bitcoin for the long term. And on top of that, we sell other services to the people who have vaults with us. One of them is a Bitcoin sort of over-the-counter buying product. People can buy Bitcoin through us. If they're in Texas, California, and Illinois, we'll be announcing more states soon. Right now, it's more of a bulk order product. It's for people that want to place a buy order of $50,000 or more. We're working on ways to sort of decrease that and make it available for everyone at any price. But for now, it's a good way for people to buy Bitcoin, and it's been a good time. We launched that product 3 months ago. It's been our fastest growing product. There's just a lot of interest in Bitcoin these days with everything going on. It's kind of in the news every week, it feels like. And so there's continued interest in people accumulating some.
Mechanically, so going back to the vault, mechanically, how would that work? Like, I own a little bit of Bitcoin. I have it I bought it through Coinbase. And so like if I wanted to put that Bitcoin in your vault, how does that work logistically? Like how would it get transferred digitally? Like how do you need to get access to like my account, or how would you pull that into your vault?
That's great. So, again, like we were talking about, all the Bitcoin actually lives on the Bitcoin network. And so the Bitcoin that you hold through Coinbase, it's just, they have the keys that control Bitcoin, and they kind of, they have it in your name, if you will. So if you'd like to become an Unchained user, we very much welcome you as a user. Happy to give you a demo and hook you up, Joe. But the way our service works is we use a property of Bitcoin called multi-signature addresses. So multi-signature address is an address that, like, if you remember those kind of nuclear silos, you've got to put in 2 keys and rotate them or at the same time to launch the missiles or something. So that's multi-sig, but in a digital context. And so to move the Bitcoin in a multi-signature address, you need some subset of keys that you predetermined ahead of time before you started using that address. And so if those keys are actually used to sign multiple keys, then the Bitcoin will move. So our vault product, it uses a 2 of 3 construct. So 2 of 3 predetermined keys are required to sign for the Bitcoin to move. One of those keys is always us. 2 of the keys are held by the client. So the client always has that majority. They always have the 2 of 3 that they can move at any time without our involvement. And the 2 keys that the client holds, right now they live on devices called hardware wallets. And hardware wallets, if you've been in Bitcoin or the space or something, I hope you've heard of them. I mean, they are still probably the easiest way to feel that sovereign control over Bitcoin, to feel like, oh, it's on this, or oh, my key is on this thing, and when I use this to send it to another person, nothing's in between that. It's just me talking to the network. So we require our clients to use 2 hardware wallets. And we have an easy starter kit and onboarding kit that people can purchase through us, and we'll get them shipped 2 hardware wallets from the manufacturer. And then with those 2 devices set up, they associate with their account at Unchained, and we use those devices to create these multi-signature addresses that then you would deposit your Bitcoin. So in your case, assuming you got the 2 devices, you set up your vault with Unchained, you would then go to Coinbase and you'd send the coin through Coinbase to your Unchained Vault address. And then once it lives there, you can use our website to move the funds. We also have some open source tools and like off-platform tools you can use to move the Bitcoin. So again, and I would see you doing that because you wanted to feel like, again, nothing was in the way of you really holding your own Bitcoin. The way people usually have that feeling is with one hardware wallet, but that has a single point of failure and a problem to it too. What if you lose it or drop in some water? So by asking the client to have 2 devices, you have some redundancy.
Gotcha. So once that, like, say I put money in a vault with Unchained Capital, can that be taken out at any time?
Not by Unchained, but by you, yes.
Right. So like, say I want, like, a couple months down the road, I wanted to take it out for whatever, and I could do that anytime?
100%.
Gotcha. Do you have any products, kind of like a traditional bank, where I just want to, I mean, like, I don't understand, like, maybe in the vault situation, do you have a product or an offering where, I mean, you can put a few Bitcoins in there and let them gain interest or pay interest on having them in the vault or something similar?
Yeah, we're working on some products that will do that for people. But that starts to have more the flavor of, okay, you deposit it here, but you can't get it out anytime, or you now have some restrictions on getting it out. And there are some companies out there that do this, that have what's called more like a depository account. And so they'll say, give us 10 Bitcoin and we'll pay you 6% per year every month in interest. And some may or may not like let you pull it out any day or with 48 hours notice, kind of a thing. But what those firms are doing is they're then taking that Bitcoin and then relending that out to other people or firms that then borrow it at like a higher interest rate. So they're paying you 6, they're getting 8, and they're taking the difference. And so that's done by people. That there's risk associated with that. It's somewhat a classic kind of fractional reserve, that banking model. And so there's money to be made there, and some clients choose to trust those places as a place to put their Bitcoin. But a lot of people, if they're holding Bitcoin for the long term, they look at it as an asset that's gone up on its own at 300% kind of every year, just in kind of dollar terms. And so to kind of put it at risk, put it in an account that might blow up if the company goes under or their loans don't perform, to put it in an account like that and risk losing it, it's not always a trade-off people are willing to make. So we have seen a lot of success, and our kind of core clients are ones we attract to. It's more of, hey, this is Bitcoin you're going to hold for decades, maybe generations, and you want the kind of safest long-term storage possible, and that's generally multi-sig.
Gotcha. So you say you also sell, like, people can buy Bitcoin from you. Mm-hmm. Again, like, kind of logistically, how would that work? Like, say I don't have a Coinbase, I don't have any platform, and I want to come to you and I want to buy 3 Bitcoins. How do you hold that for me, or do I need to get some type of wallet to receive it?
Yeah, essentially, we only sell Bitcoin to clients who have a vault with us, and we insist and we'll deposit the Bitcoin in their vault once it's set up through us. So the client, at the point they'd like to buy through us, we'll have to have set up a profile, created a vault, which requires them having the 2 hardware wallets, and then they basically contact us saying, I'd like to make a purchase, and we operate through what's a somewhat classic over-the-counter trading model, at least in the cryptocurrency ecosystem, where we quote clients when they ask us, hey, I'd like to buy this, I'd like to buy 3 Bitcoin. So, okay, here's the price. You accept, and if they accept, then we'll execute the trade. And once we receive their money, we take the purchase amount through wire. We'll send their Bitcoin to their vault.
Gotcha. Regarding your technology, do you have number one, do you have IP on your technology? And then number 2, can you kind of talk about, like, how difficult it was to put together the technology to be able to run this type of business?
Sure. Yes, we definitely have IP here, and but some of our approach is, so Bitcoin is its own open source protocol, and there's a lot of we try to figure out in our strategy is how to, for instance, see that as many people as possible are using, for instance, these hardware wallets and or this multi-sig idea. And so that kind of, this idea of people being close to the protocol is, for me, how we enable and how we create more value for the Bitcoin holder in the ecosystem. Because a lot of the services live in a way that they're kind of in the way. Again, Coinbase is in the way of you moving your Bitcoin, period. Even though you might have an account with them today, their policies could change tomorrow, your license could expire, and they say, hey, we need a new license before we can release your Bitcoin. And that's okay. People can make that trade-off. But in any case, so all that's to say, we produce a lot of open source software, a lot of software that people can use through us or without us, really, to access their Bitcoin, to manage their Bitcoin. But they're doing it in a way that can talk to our systems really well and easily when they want to come get a financial product. So, something like a loan or buying Bitcoin from somewhere, that does kind of require like a firm or institution. Storing your Bitcoin, you can do that through open source things. We just try to win those clients through the convenience and ease of use of our platform, over an open source tool that might be a little more clunky, or people feel like they're kind of in the dark or on their own. So we open source a lot of our stuff. It's an active area development and releases for us. And the more kind of IP things that we keep inside the company, those just have to do with the way a product like our loan product connects to the Bitcoin storage area. So how we store Bitcoin and the multi-sig setup pieces, those are open source sort of components. It's like we have an open core kind of business model. It's one way people talk about it. But then the actual more of the business logic and how things tie together, a lot of the glue and things like that live on top or around that open core.
Understood. When you guys launched in 2016, what did your competition look like? Were there folks that were doing offering similar services? And what does your competition look like today?
We were, honestly, we were probably like the first publicly available lender. There's some people talking about launching, and there's even an ICO or two that launched around 2016, 17 to do these loans against Bitcoin. But I want to say we were the first to be doing it like publicly and having clients come in to borrow with us. Things have evolved. There is a lot more lending activity in the space. It's got more sophisticated. There's more volume. We don't consider necessarily loans as like the thing we compete with people most on. For us, the more active area these days is around custody and helping people manage their Bitcoin through multi-sig. So there are a few other multi-sig providers. We think it's great. A rising tide lifts all boats. And because we consider ourselves as selling kind of multi-sig powered financial services, someone's using a multi-sig over here. When they come looking for a loan or financial service, they're more likely to get it through somebody like us. So, it's funny. I think Bitcoin is, there's never like one winner in Bitcoin, and also there's also like never one bank. It would be silly if JP Morgan and Chase just issued all the loans ever, or like that just never happens. You look around a street corner and there's like 3 different banks within a half mile of each other or something like that. I think that's really healthy, and it's been good, to have competition, because it means we know we're working on something valuable.
So are your customers kind of like all over? Is it international? Do you have clients from everywhere?
These days, most all our clients are concentrated in the U.S. We have some in Australia. I guess I'm speaking more of the loans product too. Vaults really can be anywhere. We do have clients worldwide that are Europe or South America and across the U.S. for the Vaults product. Our loans are, because there's more regulations and restrictions we have to have in place there, and we've got to work with people's bank accounts. That's principally just the U.S. and Australia right now.
Gotcha.
And I was going to ask, and we can edit this out if you already touched on it. Sorry, I had to step away. But since you, if somebody defaults on a loan, which you said that it hasn't or doesn't happen, but then do you keep the Bitcoin, and then also do you sell Bitcoins to customers if they're interested, or do you just see that as actual extra capital that you sell it then on your own and have extra funding that way?
No, so the way we work is if there's a price crash, or and we define certain margin call levels at which a client is asked to post more Bitcoin. But in those kinds of instances, if they don't meet margin calls, or even if they ask us to, because that's totally legit, they could say, "Hey, I can't send Bitcoin right now, but could you sell this much of it?" We will sell or we'll liquidate it. We don't hold on to Bitcoin if a client's collateral value were to go down to the kind of penultimate margin level. Like we're just liquidating the entire loan amount out of the collateral. Our loans start with a 2-to-1 collateral to principal ratio. So if you'd like a $100,000 loan, we require $200,000 of collateral. So a lot of buffer, a lot of cushion there, but it can get tested. And then we do sell Bitcoin to clients. From their side, it looks like they're buying Bitcoin, but that's completely separate from the lending business.
Okay.
So you guys got some press in the Financial Times, Forbes, Crunchbase, so quite a few. Do you guys get hit up by the press pretty frequently?
It depends, I think a lot of the press relationships is a kind of a relationship thing. I think, increasingly, some publications have spent a lot more focus on the kind of Bitcoin lending industry in the last few months. And so, journalists will reach out for comments or questions about some aspects of this corner of the industry. I think, it's a hot and cold thing with PR sometimes. It just depends on kind of what the news of the day is and whether we have something to say. Certainly we have an announcement or a launch or things like that, you'll be reaching out. And I think we are well positioned for in the coming years as Bitcoin likely sees more price appreciation and more attention. Having been in the space as long as we have, in building the kind of financial institution we are, I think we will be a good resource for more press and people asking questions in the future.
Just recently, you guys partnered up with Trezor, a hardware wallet. Did you guys get some press on that?
Yeah, I don't know. I'd say press. Maybe we could have melted for some more. And that got a lot of love. Sometimes it can surprise you, or it shouldn't be surprising you what does to turn the trick. But yeah, that was Trezor is a very well-respected company in the space. They manufacture one of these hardware wallets that I've been talking about. And they're a lot of kind of OG type people. I think the first Trezors were out in like 2014 or something like that. And so really, really great product that, a lot of that user base are folks that we think would make great users of our product as well. And Trezor is a kind of, they live at this hardware level and they have software too. We're types of folks that sort of build on their platform in a way. And so as we kind of build features and integrate with them in new ways, it's great for them to talk about it and we'll talk about it too.
Nice. Can you kind of talk about a little bit about the number of employees you have and the executive team at Unchained Capital?
Sure. So we have 22 people total. I think 2 of them are part-time. And so we've been a slow, growing company. That's partly because of our industry. Bitcoin is a volatile space. Just as much as people love getting loans on the way to $20,000, people don't really think about taking a loan against their Bitcoin when it crashes. And so that's where, for us, kind of building out a more of a suite of products, like our Vault product and our Buy Bitcoin product, and some of the other ones we'll soon announce, has been really important. And so given the kind of wider surface area we have to have as or a financial service provider, where you need a sort of flywheel of different products people can get through you, we do have a pretty multidisciplinary team. And that definitely plays out in our executive team, which right now is really 6 of us. It's myself, my co-founder, Drew, who is technically our chief technology and chief science officer. And then we're joined by our chief product officer, a gentleman named Will Cole. He did a tour. He was at Stack Exchange, which the makers of Stack Overflow, the wildly popular website for programmers that is a Q&A site. So he was their VP product for a number of years. He was there for 8 years. And then we have also our head of business development, Parker Lewis. He was at Unchained Capital, which is a hedge fund in Dallas, Fort Worth area for a number of years. On top of that, being at Credit Suisse, a number of financial services firms. Amy Rooker's our VP operations. She's a fantastic individual who was once an attorney for a while, then joined a solar startup, a fast-growing solar lending startup in the Bay Area that she was at for a number of years, was their kind of VP operations and compliance. A lot of great background experience to work here, financial services firm. Also have Velvet Campbell. She's our head of client services. She's amazing. She did a tour through like HP Enterprise and almost had some overlap even from our back in the day when I was at Computer Science Corporation, the company that bought InfoChimps. but she just got really into Bitcoin at a certain point and like wanted to do anything in the space, and just has been a really wonderful person and relationship builder with our clients. And then she leads a lot of other important initiatives inside the team. So yeah, kind of having a strong, it's been really fortunate in this startup to have a strong leadership team like we have, and just a lot of really capable people. And so puts me in a good position to lean on them. And I think just get a lot more done as a smaller team than people might expect. And people would think they need to be bigger to do all that we do.
That's great. That's great. Can you talk about the your revenue model? I mean, I know the loans are pretty straightforward, but I guess kind of pricing for your vaults and how do you your revenue model for selling the Bitcoin?
Sure. So the vaults are it's a basic base model. The vaults are free to use, free to set up. They don't cost the client anything, except for if we're asked to sign a transaction. So as I mentioned, the clients hold 2 keys, we hold 1. That means we're kind of a backup, or just if they can't find one of their keys sometime or they've lost it, they can ask us to sign transactions. So we do charge $25 for individuals, $125 for businesses in those instances. But we really look at, in the way we make money over the long run is as a financial services provider to people, like alongside their Bitcoin vaults. So whether it's a Bitcoin-backed loan, which yes, have a straightforward, there's an origination fee and a flat interest rate the client pays. And so part of that interest rate we receive, as well as the origination fee. So that's the moneymaker there. And then when we sell Bitcoin to people, there's a price at which we can acquire it and we can sell them at it. That we're usually not making much there, but there's a fee, a 0.5% fee that we charge for really the convenience of being the only place you can buy Bitcoin that gets deposited into your cold storage vault without not making any steps in between. Often people are buying on Coinbase and then moving to these secure storage places, but we kind of skip that middle step for them.
Nice.
For your interest rates on your loans, is there any kind of federal regulation on that, or how do you, if not, how do you kind of set where you're going to be at with that percentage?
Yeah, it's definitely it's driven by the market, and kind of we have sources of capital that we get the money from for the loans, and those people have like a certain rate of return or certain comfort or discomfort they'll have with Bitcoin, and so they'll say, to put this capital in that kind of a thing, I need this type of interest rate. And so it's a back and forth. Our interest rates right now, they range between 11 and 13%, I want to say, depending on the term. So shorter term loans will have a shorter or a smaller interest rate. And so it's just kind of a mixture of those factors. I think over the very long term, rates will come down, but still it's not as developed of a market where, the people are really, really comfortable with Bitcoin, and they might just buy Bitcoin instead of lend against it.
And then for the vault capabilities, can you put like partial Bitcoins in there? Is it only?
Yeah.
Okay.
Oh, yeah.
Awesome.
What is that called? Something. So starts with an S.
Satoshi. Yeah, Satoshi.
I thought you were going to swear there, Joe.
Yep. How has COVID-19 affected Unchained Capital's business, and how has COVID-19 affected the Bitcoin market?
Yeah, it's been a really interesting 6 months or so. For us at Unchained, most of us we're in Austin, some were remote. So we did go all remote there in March, and that's been a fine transition. We've managed culturally, managed to just evolve some practices like weekly happy hours. We do weekly lunch pods, kinds of things, just kind of maintain cohesion and keep people really familiar with each other. And then, but Bitcoin has its own experience through it, I think. And it's like, I know there's a lot of hardship and a lot of difficult industries right now. And my heart goes out a lot to these people, and I try to do whatever I can. But Bitcoin, it's kind of a bright spot as an industry. And some of that's not so much just because it's, a direct effect of coronavirus, but really the government response and, these kinds of stimulus packages and what the U.S. Federal Reserve does. It's we can get real wonky on like banking monetary theory here if we need, but there's essentially this idea that the government can create money and they can create that money and then give it out as loans or give it out in these other ways. And so, that more money means like the dollars you or I already have are kind of worth less as a fraction of the whole. They're now a smaller fraction of the whole. And so that people would argue now decreases the spending power. It means that gallon of milk, that's whatever it is today, is going to be much more in the future. So the $4 I got in the account, I'm thinking I'm going to spend on milk. It'll only give me half a gallon of milk in some point in the future. So there's some truth to things like that, I think. And I think but there are a lot of hard concepts, like money is its own really hard thing for people to wrap their heads around. These big systemic concepts are difficult. So either way, all to say though, these headlines about the Federal Reserve and these kinds of things, a lot of people believe in the dangers of those type of policies and programs. And so historically, 10 and 20 years ago, those kinds of people would resort to gold as like let me go buy gold then, like this gold's value will go up if there's more dollars. Bitcoin's really now that like new or modern alternative, in addition to having tailwinds from being more kind of millennial friendly, or like for people that are digitally native, the idea of like internet money is maybe more valid and relevant to them. So it's just kind of Bitcoin striking more of a chord with more and more of the population. It did have a huge sell off in March. As I mentioned, it was at like $8,000 or so and crashed to just under $4,000. But it's kind of sort of the whole market that day. And that kind of also tells you, okay, there's a lot of money that's mature money that plays in both markets. It plays in traditional stock markets and in Bitcoin. And so Bitcoin overall has just become more and more of a robustly and like more maturely traded asset like gold. And you've seen that happen in the last 6 months.
That's kind of what I was thinking too. Even though I said, Bitcoin, it's not really something that you can hold on to. You're not looking at a real coin. It's kind of almost the same concept like you're getting into about gold. It's like, all right, I'm holding this 8 ounces of gold, but it's worth this now and it's worth this more. It didn't grow. It's not a stock. The company didn't get better. It's just based off of fluctuations in the market and stuff like that. So yeah, it's very comparable. I agree.
Mm-hmm. And then there's an idea too that people try to, that they use in their belief of their gold investments, that when you hold that 8 ounces of gold today, that 8 is a fraction of some amount of gold that's like going to exist. And then there's fractionally, there's like, there's more gold in mine. And so there's always some amount of that overall pie that grows. But out of the appeal and traction of people is they know there will always ever only be 21 million Bitcoin. So when you own one Bitcoin, you always own that fraction of the whole. And so people think that as there's more dollars out there swimming around, that more of those dollars will, like a Bitcoin, a fraction of the network will be worth more in those dollar terms.
And so one question I had, and again, if you talked about it before when I stepped away, I'll edit it out. But I was thinking back when you first started the company and back in 2016, I felt like Bitcoin didn't really have any kind of, people didn't really believe in it until it really thoroughly went up at the end of 2017. So did you have any struggles with trying to get loans from banks, or if you were trying to get anybody to back you for finances and say, oh, you're going to try to trade or, house these virtual Bitcoins? We don't really believe in that. Did you struggle with that at all?
Oh, yeah. Yeah. Bitcoin. I mean, I mentioned some of my own, Bitcoin has this thing it does with a lot of people that get into it. If they hear about it, then they dismiss it, and then they get back into it when they hear it's not dead or they hear it hit a new all-time high. So that's one part of the truth. But then the other thing was, definitely in 2016, 17, my biggest existential risk was getting a bank account. Yeah. Banks just didn't want to trust a cryptocurrency company. The part of our insight in trying to start as a lender, though, was because the hardest business at that time to really get bank accounts for were exchanges, because those have kind of a lot more regulations or a lot of different ways people might try to launder money or do things that banks are trained to be guarded against. And so by lending against Bitcoin, we can rightfully and honestly claim that we're not a money transmitter, we're just a lender. We lend dollars to people, which Lending Club does, On Deck, all these online lenders have been doing. We just happen to take Bitcoin as collateral. And so that was weird enough for a lot of banks to still scare them off, and even lending companies have a little bit of heightened scrutiny. But fortunately, we did find a good banking partner in 2017 that we've kind of been with ever since. And there are by now a lot more banks that are comfortable with the asset. Banks are even now told by their regulator, the OCC, that they can custody Bitcoin for clients. So there's been thankfully some progressive evolution in the banking system for working with companies like ours.
Awesome.
You guys got some VC money, right? At the kind of the beginning.
Yep. Yeah, we raised a round that we publicly announced that closed in May 2018. That was just under $3 million. Since raised more money that we haven't yet announced. All told, we've raised just under $6 million.
How was that process pitching to VCs? Was that, I mean, again, is it kind of a situation where they were reluctant to accept an idea like this, or is it just kind of, that this is almost kind of common at that time?
Yeah, we definitely have a complicated history with pitching VCs. I think where again, Bitcoin kind of can go in and out of style as a company focus, sometimes either price dependent or just market dependent. And so we were and then even at that time, Bitcoin was, as I mentioned, like a $10 billion asset. Now it's on the order of more like $200 billion. And so we've always been like, we were just as excited, or now we're more excited, but like we're just about as excited as we are now with a $10 billion asset to be working on this company. And so we've been fortunate to find like believers, the people who have written checks and invested in the company, or have been believers and stuck with us this whole way. But it is a challenge because there's a lot of other ideas out there. People believe in Ethereum. People believe that it's not just going to be Bitcoin. There's going to be 100 of these things. I think there's a lot of thinking and appreciating you have to do of Bitcoin to really see why it's worth focusing as much as we do on it, and continue to build on it. So yeah, it is a challenge. Sometimes we're kind of more of a minority out there when it comes to our message, but I think time will really tell, and I think should prove us right. Gotcha.
How do y'all reach customers? Do y'all do any advertising, marketing?
We do some both. We have some content that we write. We have some really great blog post writers inside the team that write on economics and Bitcoin and monetary theory. We have also my co-founder Drew has written about space and Bitcoin, whether Bitcoin will be able to be used by our future Mars colony. It's a really great blog post people should check out. So a lot of Bitcoin like activity happens on Twitter. So Twitter is probably our number one place for referrals and activities and things like that. We sponsor a few podcasts and newsletters in the space that write good Bitcoin content. And we have communities we might like to support. So awesome. Mix of things.
First, I know this is a super speculative question everyone likes to ask. How high do you think Bitcoin can get, I guess, in the next 5 years or so? And secondly, do you think that cryptocurrency and Bitcoin is going to be the norm in the next 20, 30 years from now as a currency?
Yeah, I mean, why such a bear case, man? Sorry, edit this out. I was saying $100,000 in my head. In 5 years, I think Bitcoin could hit like $100,000. I think a 10x kind of outcome for it is not crazy. This is just speculation. This is, not investment advice, financial advice for anybody. But just as someone who, I just see more and more infrastructure getting built. I see a lot of exchanges coming online. I see more people, more different kinds of people buying Bitcoin. And, one of the key things that got us into Bitcoin and starting financial services for it is the amount of people who hold for the long term. So we produced a chart called the HODL waves. You can see it on our website, and plenty of others host a version of it by now. But because Bitcoin is a public blockchain, you can look at the state of all the money at any point in time, and you can see, there's some like base amount of Bitcoin that's lost and it hasn't moved for 5 years. There's at least 60% of all Bitcoin that hasn't moved in a year or more. And so that's people using a service like ours to just hold it for the long term or somewhere else. And so and that number's kind of grown and recently, and it happens through cycles. Like I bet if Bitcoin hit 50K in a few months, like a lot of these people would sell. And so, it might be more like back down to 40 or 50% of Bitcoin that hadn't moved for a year. But there's this kind of waves that happen as people buy it and then sit on it as a store of value for the long term. And so those things will play out, I think, in Bitcoin and cryptocurrencies. Absolutely, more and more commerce and transactions happen online and in digital mediums. These are natively digital assets that can work within those environments quite easily. So, I think we will see, and just in the way that there will need to be other global currencies beside the dollar. There'll need to be other ways we can connect business and enter into contracts that that aren't dependent on the U.S. banking system, which is subject to sanctions or issues and AML KYC procedures and things like that, and have a lot of privacy infringement. So, Bitcoin, I really look at as the spearhead to a more global, fair, kind of equal commerce playing field. And then that other assets have similar qualities to it too, that are cryptocurrencies. But
I was reading about Ethereum has like the smart contract capability. Does Bitcoin have that?
Uh-huh.
They do?
To a very limited degree, not as like robustly or as expressively as people usually when they mean or talk about smart contracts. But our loans we deliver through a type of smart contract on Bitcoin, something called multi-sig. We talked about that earlier. We just use a much simpler construct instead of trying to spell out all the reasons or ways or times that this Bitcoin needs to go to us versus back to the borrower. You can't. It's really hard. You can't really kind of do that. You can't spell that in Bitcoin, whereas in Ethereum you kind of can. Ethereum gives you a lot more space and rope to hang yourself, if you will. Basically, it's a lot more hacks and exploits that happen where these assets get put in a contract and the contract has some flaw to found later and people lose money or things like that can happen. And so there's a lot of cool things that happen on Ethereum. I think it is a really interesting community, and there's things going on in it that people in Bitcoin can learn from. But I do think a lot of things that people are able to get going really quickly with in Ethereum will eventually come to Bitcoin. Bitcoin just has more of a, I think, slower layered approach to how it will power applications in the future.
Gotcha. I guess we're getting towards the end here and getting close to wrapping up, and we don't want to take too much more of your time, but a couple kind of final questions for you. Number one, what is your favorite restaurant in Austin? And number two, what are you watching on Netflix right now?
Favorite restaurant in Austin right now? It's Sala and Betty on Airport Boulevard. Just really my jam. My wife and I moved. We're kind of close to Mueller area right now, and so this Sala and Betty's like just up the road. I really liked from downtown when we got the there's like Modern Market that showed up, and the other these just healthy food places where you get like a protein and you can get some carbs and veggies on the side kind of thing. It's like a real meal that they can make in 15 minutes. So Sal and Betty's that, and plus they've got great burgers. What was the other question? That's the restaurant.
What are you watching on Netflix right now?
Oh,
or Hulu or whatever.
We're watching Perry Mason on HBO. Just checking that out. It's kind of an interesting series. My wife and I had a newborn, had a baby girl born in the last 2 months. So the evenings we kind of wind down with some Perry Mason.
Congrats on the new baby.
Thank you.
Joe Kelly, thank you so much for coming on the podcast and talking about Unchained Capital, exciting stuff. Anyone listening that wants to purchase Bitcoin or has some Bitcoin that they want to put in cold storage, check out Unchained Capital on their website. You guys are on Twitter. What's the best way to find your company?
Yeah, really, unchained-capital.com or Twitter at unchainedcap.
Awesome. Joe Kelly, thank you so much.
Thanks. Great to be here.
This episode is brought to you by our affiliate Gemini. Gemini is a well-respected cryptocurrency exchange started by Cameron and Tyler Winklevoss. If you're interested in purchasing Bitcoin, Ethereum, or other altcoins, please check out their website at gemini.sjv.io/Moontower to learn all about it. Thank you.